folks, what's good? I hope everyone is doing okay. This will be the last technical lecture this week. Thursday, week 3, month 8, quarter 3. Welcome, and this is the British pound. So, after this lecture is done, or after I'm done recording this, I'll be sharing an execution that I had this week. It's probably the last this month, the last this week, and the last this month. Something I took. But before I do so, I will explain some stuff for you and for everyone else. Here is the thing. What's the current state of the market structure? It is overall bullish, correct? What's the overall state of the internal market or the lower time frame or the intraday chart? It's bearish. Right? The framework says we're bearish until or we're bullish until. The until is the twist and is the most important factor in terms of learning when you're trading or you're buying until or you're selling until or you keep buying until or you keep selling until. Some of the candles are extremely decisive that you can trade them. Some of them, their daily profiles are extremely important. Some daily candles are more important than an entire weekly candle and an entire monthly candle sometimes. Right? So what do I mean by that? I will explain. Some of the daily candles sometimes are found at the low end below the opening price of a monthly bullish candle, vice versa. And then one of these candles is Wednesday, week 1, for example, or Tuesday, week 1, right? A closure or inefficiencies are meant to be delivered into with wicks. Why? Inefficiency, there is a lack of sell side here. So a buy side and sell side, aka a wick, every single wick you see is a buy side and a sell side move, by the way. So the moment we close in the gap, that's the first invalidation, especially if we close above the 50% portion of it. Then a change in the state of delivery, and then a beginning of a creation of a gap. And a crucial candle to indicate a weekly direction and even more a monthly direction. The idea that you're really gaining from this quote unquote framework is that by understanding some of the daily candles and some of the profiles, you could potentially gain an entire monthly move sometimes or an entire weekly move. And these daily candles, their profiles, so for example, at the time this candle was printing, you couldn't tell whether it's gonna print bullish above here or it's gonna sell back to the lows, since Monday closed back within using some sort of a level on the left. So what's the idea? Is that watching the profile of this daily candle. Watching its profile is a lot more important than watching the entire weekly candle. So this single candle brought us the idea of buying Wednesday, potentially buying Tuesday, Wednesday, and even Thursday, or hold until Thursday. So the same framework goes, but a vice versa framework. So if I ask you what do you see on the higher time frame, it's only gonna be bullish based on a range, correct? Based on a range only. So you're bullish, but your monthly candle is averaging how much? 450 pips per month, which is already exceeded during this monthly candle, right? When a range is found, doesn't mean it's gonna be reached when it's low, gets rated, its high is immediately gonna get taken. There is the kiss of death, 50%, OTE, whatever. The framework of when your goal should be hit is a whole new topic that we've never touched about, not even since the beginning of this mentorship, right? Which is a whole new topic. When is your goal exactly gonna be hit, right? Which is something that we could cover up in the upcoming future. But an average pips has already been exceeded during this monthly candle. A premium level is hit, 50% of an order block, and then your weekly chart says bullish, but your weekly chart is expanding and leaving ranges open, and leaving more than that inefficiencies and liquidity pools and old ranges and old highs. So don't get me wrong, you can never use balanced price areas as a magnet. What you could use are inefficiencies and then lows when highs get rejected and highs when lows gets rejected. Right? That's the only correct term when you're using magnet. That's the only two words you could use. Highs when lows gets rejected, lows when highs gets rejected, and inefficiencies. Preferably when it's a low when a high gets rejected, and that low is a higher time frame inefficiency. That's the best magnet if you want to counter trend. Now, if it's one of them, then it's less probable, but it's still a high probability chance of us selling back to it or getting bought back to it before selling off. So here's the idea, right? We're bullish, absolutely. Until now, we've left an old range. At the time the candle opened, you couldn't tell whether the candle is gonna raid and get bought back up, or an efficiency get bought back up, or balanced price area and get bought back up, or an actual OTE, which is the least favorable among all of them. Now, step by step, how could you recognize it? Because I didn't, and I was bullish, and I was looking for buys, but I was never offered. And here's where the patience comes in play. And when did I sold? So before I tell you where and which candle I sold, can you guess it? Right? Because the entire framework during this weekly candle was about bullish, was about higher prices. So could you guess which daily candle I sold before I even start building a framework here? Well, if you didn't, you just pause the video, think about it. Which daily candle? Was it Monday? Or was it Monday? Was it Tuesday, Wednesday, or Thursday? Which daily candle have I sold? It's up to you. Well, when I speak about framework, I only want to speak about Dixie. Because the higher time frame on the chart itself, even on the British pound, is not as relevant when Dixie is saying lower. You can't sell GU when Dixie is saying lower. Even if GU is still indicating a bullish order flow and higher prices, right? So there's two things I will want to cover up on GU: is the lower time frame trends when they occur, and then the targets. So on Dixie, which is the main thing, this is the original analysis: rate of a high, OTE, close below up close candles. Then at the time the candle was opening, that's the line I had marked out. That's the I. And finally, that's the liquidity pool inside a higher time frame key level. So what changed exactly? What changed? Which daily candle indicated bullishness? Which daily candle indicated something different on Dixie? Well, let me take you to the opposite, right? To the opposite framework. When or how was the idea presented? By a range. Low, failed to be displaced below, and a high gets created. Remember, the most recent high, it's always going to start with an impulse move, and then the recent high and the low, or the recent low and the high. Low gets falsely broken below. How? An absence of inefficiencies, an absence of no willingness to sponsor it. Instead, close below once and then engulf the candle that liquidated the low. That's a false breakdown, right? And then never close in more than twice below the 50% mark of this order block. Although it's relevant, what I'm watching is the 50% mark of the range. Then my anticipation is, I don't care how we close inside the range here. All I'm thinking if, because at the time, how I see it is a breakdown, not necessarily below the low, but below the up close candles. Order flow is bearish. I'm all focused on that. Now, what's missing? What's the missing piece? Is the range. Low rejected, and then the little details takes place. So your three words are Range low, 50%, range high. Now the little details takes place. Now watch. First you have a range inside an already existing range, which is a 4-hour range, by the way, right? Second, you have a down close candle, correct? Third, you have Monday, a thick volumed candle. You have 3 lines to draw, and as you guys guessed it, previously on the last couple weeks, I've been mentioning the 3 candles that gives you bias. Candle number 1, candle number 2, candle number 3. The original plan was selling the high inside a higher time frame key level when it's reached. That's the first, the original plan. Not to here. That's not the first range that occurred. So I'm selling until here, until here. Now, what happens? Monday is a thick volumed candle. Monday is a range. It's high and it's low is a range. I'm waiting. Then the candle that must be classic, that gives you the classic profile is gonna be Tuesday. Now notice what happens. Tuesday, and I'm still not getting involved. Why? Because the high was never taken. If the high was taken on Tuesday, well, obviously it was a bullish profile. But if there was a rally above the open and the high was taken on Tuesday, I would have entered and that would have been a loss. In case you're wondering, the loss would have been above this high. Instead, the little details. First, the daily profile on this candle was a bullish daily profile. Second, closing above Monday on Tuesday, then closing above a down close candle in supposedly a bearish market. So what's the issue? The last line is the range. And why is it the most important? Is because if this is the correct range, then even if we close above here, it still doesn't matter. Because the framework is range high, 50% and range low. Right? If it's a trend, then we're going to use this down close candle to move higher. And that's exactly what we had. A bullish profile on Wednesday. Then, obviously, we did not close above, but here's where GU comes in play. So, the idea of completely bearish Dixie is now false. I can't blindly count on Dixie because of this and because of this. And because of this, Wednesday was not bullish. Wednesday was, the main move was higher, but never closed bullish or never closed above the high. That's good. But the idea goes as follows. We used a bullish key level to trade above a high. That's an issue. So the idea of bias was born here on Dixie at the end of Tuesday. So everything else that happens on Dixie is going to be a way for me to hold my trade. And as you can guess it, or as you guessed it, my entry was on Wednesday. Now let me take you back to GU and let me take you to where I'm at. Am I holding? Am I not? So this is the current hourly chart. And now pay attention because it's going to be a little bit detailed. All right? So this is, what do you see? First, what do you see? This is a hourly bearish chart. Correct? This is an hourly bearish chart. Every single top you see is going to be a future liquidity pool when a discount level is hit. Which means if you miss exit a trade, you're going to get wrecked immediately and with speed. The time we took to reach a discount level, if a long-term bullish, is going to be way less when it comes to distributing back to the highs. But rejecting a high, breaking below low. That's the first range. That's the first step. Then an OTE, rejecting a high, breaking below a low. You realize a pattern. rejecting a high, breaking below a low. Now there is an absolute pattern taking place. Now, don't pay attention to the higher time frame because we're gonna come to it. But I did mention something previously. And what was it? The thing I mentioned. It was when the higher time frame candle is bearish, the lower time frame chart is gonna be trending. Or, for example, if your monthly candle is bearish, the first indication is gonna be a bunch of 4-hour raids and 4-hour breakdowns. So by all means, if I'm counting on a single move per weekly candle, then obviously the move that's happening right now from Monday, right, to Tuesday, to Wednesday is lower. Adding to that a potential profile after Monday midnight being born. Monday, liquidity pool, decline, breakdown, shift, hourly shift, and an hourly raid. Then a breakdown below the major low. And then an OTE of Monday on Tuesday. Then a sell. The only guaranteed candle to be bearish at this point is Wednesday. That's the highest probable candle to trade in terms of profile. Now, you might be saying that it's not enough. So this is one of the main reasons why I expected bullish dollar above the candle here. Above the candle here. But that's not the topic. The topic is going to be only higher time frame because it's going to be confusing for some of you to understand it. Well, first, the first indication is that we're moving from external range to an internal range. But if you look a little bit more deeper, we're moving from a liquidity pool, or we're rejecting a high, automatically we're reaching a low. Now we look hindsight. Let's take more. You can add this as a framework like I did, potentially rejecting a high, then reaching a low. Then I can frame something else, something way more different, which goes as follows. Up close candles now are ranges, acting as ranges, suspiciously, when I'm looking to buy. If I'm looking to buy, then I'm looking for this range, potentially on Monday, being ranges. So a small body candle Monday, an up close candle, which is, or not this candle, sorry, this candle, my bad. Monday being range, and this candle, a down close candle in a bullish market, being a range. Essentially, that's what I want to do. All right, that's the original plan that I want to go over. Right? Then what happens? Monday gives the profile of Monday, Tuesday, Wednesday, and Monday confirms the idea of bearish order flow until. Now, some of you will say we sold here on Tuesday, and we never closed below here on Tuesday. Now, notice what happened on Tuesday. On Tuesday, we closed below Monday. On Tuesday, we used a bearish key level to sponsor a bearish daily expansion. On Tuesday, we used a bullish candle as a range to reach a discount level. Open high, low close. What's bullish key levels doing? Sponsoring a high close of a bearish candle. Now a suspicious way to see it is born. Right? Because even here, I was still bullish. Now what happens next? Wednesday is power 3. I have a profile, I have order flow, and I have a potential dole. There's something happening due to higher time frame and lower time frame, both. Correct? Both of them. So then you have the opening price, typical rally above the opening price. And what do I have marked out? A gap that broke the low, and then a previous thick volumed candle that rebalanced an old FVG, or if you want to call it a 4-hour key level that was created by a daily key level, which is a high probability key level, quote unquote. Then what do you see? A shift on Wednesday, a midweek rally, correct? Everyone buying OTE, typical, normal. Now how do you see it, or how do I see it? An hourly liquidity pool in a bearish distribution chart paired with a higher time frame key level above. Is there any invalidation points? Absolutely. So here you have a dealing range, right? High being rejected, low being broken. Then the first rebalance, or the rebalance into the breakers, or the intermediate term highs into the breakers usually stay intact, or the first rebalance, to be less complicated with you guys. The first rebalance is always going to be safe before a breakdown. Calculating that a balanced price area due to rejecting a high, breaking a low, a range, and then rebalancing the first gap, then finally the move happens. An invalidation, a liquidity pool, and a key level. And that's a sell, right? Being aligned with news. If it wasn't with news, I wouldn't expect this kind of deeper dig to this level. And I would have picked the wick and sold here, right? But even then, I haven't sold the high itself. The trade idea was born here, created here, and invalidated here. Now, what do I need to see? Because I think I wasn't at the charts at the time this was happening. I think I was doing something else. Well, off of that, I'm looking for a change in the state of delivery, but I'm open to see the high being revisited, which means there is an entry, but my invalidation remains here, because I never trusted the top here, which means it was here. I was in, I think I was in a little bit 10 pip drawdown, but never taken out, since the stop loss was 16 pips, never this high. Then a little bit of a range, distribution, 7 a.m., OTE, typical. If there was any liquidity pools taken or any SMTs, that's an add. And then the next daily candle, is it to be sold? Absolutely. Why is that? It's actually the better candle to sell. This daily candle, trust me, Thursday is better than Wednesday to sell. Now we close below the gap, so there is no framework of kiss of death. There is no framework of false total soup. There is no framework of a reaction. What there is a bearish distribution chart reaching a low. By all means, you're selling. There is a potential profile, either Monday, Tuesday, Wednesday, or Monday sell until Friday. Here, both successfully closing below and successfully closing below. The candle closures are aligning, correct? So what's not aligning? Exactly. The only thing that was not aligning is the daily profile. Yet I would still sell the candle. Why? The same session, took both sides. So for example, if we did reach the top outside of the kill zone, then that would have been a little bit skeptical. But there's a swing point at 3 and a swing point at 5. If the top was reached outside of London's kill zone, then that would have been a potential invalidation of this daily candle, but due to it potentially being bullish, right? But the same session have both swing points. So which side is the manipulation and which side is the distribution? That's essentially what you want to do. Which side is the manipulation and which side is the distribution? That's essentially what you want to do, which is buying, getting bought back up. Again, a 4-hour level above an hourly liquidity pool created by a daily key level as sponsorship, invalidation, whatever, and then a sell-off. A better daily candle or an add if you were positioned here or here or whatever. Then a first target, always rejection blocks, and then a second target, always liquidity pools. So your liquidity pool first comes first, and sorry, your rejection block of your liquidity pool comes first, and then the liquidity pool you're aiming for comes second. Right? That's a safe way to target tops and bottoms. But with that being said, I'm a cap off the lecture. Thank you guys for both coming and listening in. And then please, if I do forget, remind me of the topic I mentioned earlier today, which was when is your goal exactly going to be reached? There you go. All right, that's a topic I want to cover up with you guys anytime soon. All right, so with that being said, you guys have a great rest of your day. Stay safe and peace, folks.